I know I said yesterday that I'm nowhere near buying in this crypto market, but in 24 hours in crypto, things change really, really fast. So what happened in the last 24 hours? Well, we got a big liquidation candle. Just look at that liquidation candle yesterday. We went down to about 108,609. But more importantly, what happened was we flushed out another $1 billion worth of liquidations. In the last 24 hours, another $1 billion was wiped out. And as a result of that, what we're finally getting is we're getting the fear and greed actually dropping down to fear. So it may be time to deploy, and we should start thinking about exactly when we're going to deploy and what we're going to be deploying into, because that's pretty much the next stage. So that's what we're going to be talking about today. I've got a Friday Banter, two very big guests here today. I've got one from Pantera, and then I've got 𝗏𝗡𝗄𝗏 coming in here today. So, big Friday Banter. Let's get the show on the road, guys. How things change quickly in crypto. Yesterday we were at 44. 24 hours later, we're at 28. And remember, I only deploy money when we get to extreme fear. We're 3 notches away from, or 8 notches away from extreme fear. And that's usually probably the time to start deploying. Why do I say that's usually the time to start deploying? Is because what we know is that in a bull market, when you hit extreme fear, there's not much time to actually be deploying your capital, because the market only remains in extreme fear for very short periods of time. I actually made a table, as you can see, and the table shows you the number of days that the market remains in extreme fear, specifically in bull markets. It's taken from a chart that looks like this. And we basically went out and measured how long do markets stay in extreme fear in a bull market. And what we realize is that from the time that it gets to extreme fear in a bull market, you have somewhere between 7 and 15 days to actually deploying your capital, barring one. And that one was the 2021 long mid-cycle correction, which was kind of that anomaly over here. This was after, I think, Luna collapsed somewhere over here. Oh, no, sorry, this was the China FUD somewhere over here. So we need to start moving our worlds and our minds to the next part of the process, because we know that the bull market isn't over. None of the indicators have hit. We're not there. And I actually made a video which I dropped on the other channel. There's a link below. Go and check it out on Crypto Insider. I dropped a video about how to really get rich from this correction. If it's the last thing that you do, watch that video. There will be a card in this show, and there will be a link below to actually go and check it out. In the interim, we need to start thinking ahead, because when we do bottom, and we do have 7 to 15 days to be deploying our capital, we need to start thinking about exactly what it is we're going to be buying. And so that's what I want to do today. And I've got 2 very big guests joining us today that are doing exactly that. They're going to show us exactly where to spend our money when this dip actually happens. But before we get the guests, guys, our Friday Banters are brought to you by NordVPN. And I've said it a million times before, you need to have a VPN in crypto. If you're in crypto without a VPN, you're basically taking such a risk. I'd say, look, it's forgivable if you lose some money on leverage trades or if your portfolio does swings. But the one thing that's absolutely not forgivable is to lose money to a hack or to giving it to the government because they caught you doing something that you shouldn't have been doing. That's why I use NordVPN. NordVPN masks your IP address. So just have a look here. I'll show you exactly how it works, right? So there's a link at the bottom of my show here, which allows you to buy the VPN on the exclusive offer. If you sign up, you pay less than $3 a month. And you see now my IP address here is being exposed. If I take a VPN, if I open my VPN, and I'm not going to connect the VPN because I'm going to disconnect myself from the internet and you guys won't be able to see me. I can pretend I'm anywhere in the world. So if I want to pretend that I'm in, let's say, Cyprus, I just clicked it. Guess what? Now I'm in Cyprus. And now, you see, there we go. So you see, now I'm in Cyprus. And if I want to disconnect, I'm no longer in Cyprus. And that's how easy it is to actually use a VPN. Now, NordVPN actually has like a VPN over a VPN. So you got like a double VPN. That's this feature over here. Guys, $3 a month. You support the channel. You keep your crypto safe. And you allow us to keep bringing you these big Friday banters. All right. So that's it. I think we need to get into the meat and potatoes of the show. So without any further ado, let me bring in our guests. big guests. I'm very excited to have them back here. They're no strangers to the channel, but they're good friends of mine, and they're people that really bring a lot of alpha. So let's get the guys on here. We've got Paul from Pantera, and we've got Yat. Yat, it looks to me like you're in a Korean hotel room. I don't know why, but it just feels to me like you're in a Korean hotel room.
Yes, yeah, and it is a Korean hotel room, obviously. But I don't know what gave it away. But anyway, yes.
And so Korea Blockchain Week, I must say I've got massive FOMO. Tell me the highlights. What are you feeling there?
Well, you should have FOMO because it's very exciting here all the time. And I was soak up some energy because it is a bit of a grind sometimes, especially when the markets do what they do just last couple of days ago. However, you come here, you feel energized. Basically, you're getting your sort of, crypto conference Red Bull, and you're ready to go. But the general thematics here really in Korea has been, surprise, surprise, stable coins, right? Yeah. There's a lot of talk about that, lots of excitement. The other one is, of course, RWAs, right? It's all the talk. And I think this really just plays into the broader conversation around institutional adoption, right? There's also questions around security and securitization of assets, for instance, right? These are all topics that are bringing in the TradFi world. And so that's a big thematic. A lot less about meme coins, which is kind of a good thing, I think. But like last year was all about meme coins and so on. This year, a little less, right? Still there, of course, and still somewhat important in different ways. But yeah, it's very much about institutions, very much about bringing TradFi, and a lot more suits walking around than before.
So I must say, I had FOMO. I've now got a lot more FOMO. And I'll tell you one thing, my wife is in Ibiza now at a friend of ours' birthday. And listening to you and listening to her, I've got much more FOMO about Korea than I have got about being in Ibiza. I'll tell you that much.
Right. Yes. We know where your true blood is. Yes.
Exactly. So guys, I want to start off the discussion around treasury companies. And I'm keen to hear your opinion on treasury company. I know that, Paul, I know you guys just launched a treasury company, and you guys have backed a lot of treasury companies. And I think the best way for me to frame this question is the following. Assuming that I had 10,000 Solana in a wallet, and I had the option of holding the Solana myself or selling the Solana, getting the dollars and throwing them into a treasury company, which would you rather do? Would you hold the Solana as a person who's crypto native? Would you hold the Solana yourself, or would you invest it into a Solana treasury company? And tell me why your answer is what your answer is. Paul, maybe I think you're most suited because you guys have just made such a big announcement about a treasury company. So you guys must be extremely bullish, right?
We're extremely bullish about treasury companies. We really pioneered the strategy of investing into digital asset treasury companies. We invested into DFDV, which coincidentally is a Solana one. And, shortly after that, we've now invested into probably like 20, maybe 30 digital asset companies. We've even launched a fund specifically to invest into digital asset treasury companies. We sort of see digital asset treasury companies as the evolution of the foundation. Hopefully you don't have to sort of go offshore in the Bahamas or Cayman, set up a foundation, and then hire, folks that are offshore that, might not be as in the weeds or might not be as commercial as if you actually just set up a corporation, especially in the US, and then be able to go out there and execute on similar strategies as the foundation, but even doing a lot more than what a foundation can do. On top of what you can do at a foundation, there's things like financial engineering. There's also a lot of things around staking and yield that you can sort of do to accumulate more of that asset and really grow assets per share. And so we really do feel like this is a tremendous way to get exposure to a single asset, but soon enough, we think that there'll be sort of multi-asset DATs that are successful. And for us, like we launched, we were investing into 20 or 30 of them. We kind of moved from being just an investor to really helping these digital asset treasury companies launch and structure. And so once you really understood what works from a team perspective, strategy perspective, structure perspective, and obviously taking a look at all the different assets that have launched, we really realized that there's an opportunity with Solana. It really starts off with us being, huge holders of Solana, having over $1 billion worth of Solana, it being, pretty much the largest position at Pantera. Well, what can we do to bring a lot of value to the ecosystem? What can we do to bring more investors in? And it's launching our own Solana DAT, HSDT, which launched early last week. And we're excited about bringing the fundamentals of Solana over to the masses.
So again, going back to my question, like as a crypto native person, do you think that it's better to hold onto your Solana, or do you think it's better to take that same cash and invest into a Solana treasury company? Because as a crypto native person, I can hold Solana, I can stake Solana myself. The question is whether there's more value that a treasury company is going to be able to add than what I can generate myself. Yeah, I'm keen to hear your view before we go back to Paul.
Yeah. Okay, sure. Well, first of all, we're very happy investors, obviously, in your DAT, Paul.
Thank you so much. We appreciate it.
Of course, we've done a number of DATs ourselves in terms of investing, and we're big believers in them. So first of all, it's a way to bring in institutional appeal to an asset. Our view is that any token worth their salt has to either be an ETF or DAT, and it's not necessarily just because it's a way to bring TradFi in and they want to invest. What sort of traditional investors, family offices and those guys need, they do need someone who's accountable for it. And so when you think about Bitcoin, Ethereum, and Solana, I mean, these are great assets, but they're decentralized ecosystems. So if something happens when you buy, your own Solana or your Bitcoin, sure, you could put it in custody in like Coinbase or something like that. However, who's accountable for that? Who's responsible? Who do you go after and say, hey, there's a problem with the thing I invested in? Who can answer to you? And that is really what a DAT can provide. It provides a form of institutional support, someone who is accountable for it as an entity, which they're looking for, right? And it's the same when you think of other commodities. Sure, you can go your own gold. But why do you buy gold through an institution? Because they can store it for you, it can handle it for you, and all that kind of stuff, right? So it's really a way of bringing on people more on board more in a sort of regulatory familiar type of way, right? Now, when it comes to sort of, what a crypto native person should do, I think as we have done, you do it both ways. Like we hold Solana and you invest in the DAT, right? And the reason why is because in some ways, it's not just about saying, not just diversifying and supporting it. That's one way to look at it. But the other one is, do you trust that the team at Pantera can manage the Solana better than you? Maybe they can, right? Because they've got all that experience. I mean, look what they've done. So you're basically investing into an asset manager. And remember, a DAT is a levered play. It's not naked tokens.
So it's an asset manager. So that's basically how you see digital asset treasury companies. They are asset managers.
Michael Saylor. Yeah, Michael Saylor is, sure, it's just HODL, but it's an asset manager, and he levers his assets to basically accumulate more. Of course, if the token value goes down, it has an impact. But the point is that if you're long a token and you want to accumulate more, sure, you can play the markets yourself, or you get someone to do this as his main thing. Then actually, it's sometimes a better way to play. It just depends on who's the manager, of course. Do they know the ecosystem?
So then my next question naturally here is, I look at all these DATs, and most of them are trading actually at under net asset value. So barring MicroStrategy and BMNR and maybe one or two others, the majority of them are trading at under net asset value. In fact, there's one BNB one which is trading at about, my calculation, about 50% of NAV, and it's backed by real people. Now you got to ask yourself, at that level, what is Wall Street telling us about their understanding of these DATs? Like 90% of them are trading under net asset value.
Yeah. Oh yeah, I can say. I'll finish off the question that you asked about crypto native. I totally agree with Yat. At the end of the day, it is part diversification, but it is also like, do you want to be an angel investor? Do you want to invest into a fund that is doing this full time professionally? And the other thing is, like, there are strategies and things that you can do as a fund that you can't do as an individual investor. For instance, like, you have to reach a certain scale to actually run your own validator on Solana. You can get actually more yield by running your own validator. And so that's one example where, like, it does make sense to partner with someone that, has that scale, be able to get you yields that you can't get. And are you going to say something, Ron? Or?
Yeah, so I hear you. I have a question though. in that case, are other Solana DATs, when you look at like forward industries and sol strategies and everything else, are they friend or foe? Are they competitors or are they friends? Like because in the DAT game, if you're all buying a single asset, it's quite unique, like because you're all buying the single asset that you're all bidding up on each other's books. At the same time, you're all competing for the same Wall Street money. So I'm kind of interested to see how you guys think of like forward or all the other guys versus your DAT.
Yeah, I would say I'll start with that, and just because he asked specifically with like forward, but then you should chime in. Yeah, I mean, look, this is there's a reason why Solana is very happy right now. I mean, there are multiple folks that are educating the market around Solana and around some of the fundamentals. I mean, obviously, like we're excited about the fact that, we see Solana as the execution layer, and the fundamentals behind volumes and revenue and economic value are just like off the charts compared to other chains. This is hugely beneficial for Solana. And so, we are working together to bring the narrative out there in a whole bunch of different types of media channels. But, look, I mean, right now there is a finite, set of capital that is willing to sort of get in. So we're sort of like frenemies, which is natural, but it's great.
Yeah. So look, I mean, from a buying opportunity standpoint, my lens on this is that this is a buying opportunity and there's an arbitrage. So you want to take advantage or not. I mean, if you're a savvy investor, it's what you do, right? If it has the assets in question, I mean, remember GPTC? I mean, right?
Exactly.
I mean, it's not that long ago, right? And so if there is a price imbalance, and if you believe in the markets, as we all do here, then take advantage of it, God damn it, right? And if you don't, fine. I mean, that's up to you. But we see this as a buying opportunity, and people should understand that. And if they don't, then really the DATs aren't doing their job in explaining it to that. And that's also the reason why you want to back the asset manager in question, because can they tell that story? Can they explain it? Now, the other thing is, of course, you are affected on token volatility as well, right? So Solana goes down. Of course, the DATs also go down. I mean, that's a given, right? And then some of it is also about communication, right? So if there's some DATs like BNB that's not doing well, I don't say that's because of the BNB asset in question. And I haven't studied this myself, this particular one. But the point being is that, do they actually have as much BNB as they said they purchased? Is it there, right? If they have it, then and if their MNAV is really, let's say, half, right? Then it would be a buying opportunity. But let's say, many of them raise the capital, but haven't yet deployed it. That's the other thing, right? And so there's a little bit of that as well. So we've got a bit of a lag time. People have raised this money, and then, they raised like, I don't know, hundreds of millions of dollars, and they say, we bought $10 million of the token. Okay, I mean, that's nice, but that actually means your implied MNAV isn't quite what you think it is relative to the share price. That's kind of one thing. And now you're on Wall Street, and that's the other thing. You've got a token that has a price, and then you've got essentially a share price that is sort of reflective of that. And of course, there's going to be arbitrage, and there's going to be people seeing an opportunity. And so you got to be transparent, and you got to be saying, okay, I'm buying the token. This is the asset, right? One of the reasons I would argue that MicroStrategy, for instance, continues to be outperforming is because everyone knows that they have this amount of Bitcoin.
Yes.
Basically,
so it's all about transparency. It comes down.
It's that. Yes.
Yeah.
Yes, exactly.
Yeah.
And that's what I would say the issue is.
Okay, so I want to. Go ahead, Paul.
Yeah, so I'll add on that question too, because we've done a bit of analysis, and it does seem like outside of Bitcoin, ETH, and Sol, the ones that are trading under par are ones that are in the altcoin section, and it is going to take time for sort of institutional investors to get a little bit more comfortable and get more educated there. And same thing with as Yat mentioned. I mean, it also takes a little bit more transparency, just kind of educating them on what's going on with those strategies, which could be a little bit different than what Bitcoin, ETH, and Sol DATs do. I think with those ones, they can be probably maybe a little less on the financial engineering side, a little bit more on the innovation side of things. And with innovation, it's going to be a bit more volatile. Obviously, the underlying assets are there, so there's still sort of like quite a bit of value. We actually are starting to see some consolidation. We saw an acquisition already, and so we are going to see some that happening, which I think is very healthy for the market.
So I must say, I've been watching this DAT game very, very, very closely. The one company is 𝗬𝗍𝗔, which is the 𝗬I DAT. And what they did was they actually, when the price went down below net asset value, they actually used $50 million of their own cash to buy back their own shares. And that was a real clear sign to the market to say, look, we're very serious about our NAV.
Exactly.
Paul, you started saying something and I cut you off. And I hope that you weren't saying what I think you were saying, and that is that soon we'd be getting DATs with multiple assets in them. I don't know if you alluded to that.
Well, we are already seeing that, and I think that's the natural evolution, right? I mean, we had the Bitcoin ETF that kind of came out, and then soon we'll have, maybe some sort of index out there, and one that has the ability to be a lot more innovative than just a pure asset index, and one that actually can accumulate more of the underlying assets.
So in the 1920s, in the 1920s, before the Great Depression, there was actually a phenomena where these investment holding companies had multiple underlying investments, and they used to trade at a premium to net asset value because they were holding multiple investments. And then at some point, what happened was the market said, hold on a second, why are we paying for diversification? And they started to price them at negatives. And I kind of believe that if we do start getting DATs that hold multiple assets, investors they're going to start trading at a massive to a discount to NAV, because in the traditional markets, if all these companies that are diversified investment holding companies trade at a negative or below the NAV. So I really hope that we don't start seeing these a single asset one where you become a for-profit foundation or a steward for the actual chain is, I think, a very good idea. And I do believe that there's fund managers out there that can manage Solana assets way better than I can manage my own Solana assets. I also believe because of their bulk, because of their strength, they can get deals for seeding liquidity, et cetera, that I myself could never, ever get. But I think when you go into the realms of multi-asset, I think that's a problem. One other point, I also think we're going to see a massive... Go ahead, Yad.
So maybe, Ran, just on the multi-asset, I think the multi-asset should be viewed also in terms of the entity and the manager, how they're managing it, because if they generate the right kind of yield for that, then that actually becomes a way in which you lever that, right? So in other words, you can have multiple assets, and the question then comes, how do you manage these assets to keep accumulating and creating returns so that you can continue to invest in them? Because I think one of the classical strategies of digital asset treasury companies has been the use of the ATM, right? And the ATM, of course, is a very useful tool. However, it is ultimately dilutive to the shareholder because you're raising more shares and more cash by issuing more shares at the market. And then what happens is that you dilute them, but of course you're supposed to buy more tokens with them. But if you have a way in which you generate actual cash flow from the yields of these assets, then you can do so in a non-dilutive manner. And that means you're either operational or have an operational aspect, or you have other ways in which you generate that yield. And you'll get to the point where, because the markets are more sophisticated, where you start getting people who might be generating 10%, 20% yields on these type of stuff, then actually it becomes interesting. And then it starts to make sense to hold the shares as opposed to holding the token, because now you have a true levered effect beyond let's just keep raising money or creating debt, right? So you have a mixture of that. So it's a tool to use, but if you overuse it, which is what happened as well, people are just like, oh, wow, great, great MNAV, let's go. But then of course you have more shares in the market. And how is that different from more tokens in the market? Of course there's selling pressure, right? That's a typical thing, right? And so it results in having to buy it back. But then what's the liquidity for buying it back? Are you creating yield or are you using shareholder money? So I think we're evolving to that. So I think that sort of companies are going to do more and more this type of stuff. We're at the first phase, right? Inspired by obviously strategy, which is like, hold forever. And that's very Bitcoin, because what is Bitcoin? Store of value forever, right?
There's nothing you can do with Bitcoin. There's nothing that you can do with Bitcoin. That's
and you're not supposed to. Yeah. The point is you're not supposed to anymore, right? Yeah. Whereas all the other assets have underlying utility and applications and stuff like that. So I totally see that evolution happening.
So I want to pivot the discussion to Solana, because Paul, you've said that it's your biggest holding. Bitcoin used to, I think, be your biggest holding, but I think now you guys have mentioned that Solana is your biggest holding. So does that mean that you guys have picked your winner? And when I say picked your winner, the Solana versus ETH discussion, because at one point ETH was dead, Then it seemed like Wall Street
Yeah.
was coming back to ETH. And you can't call ETH dead because it does have the majority of the stablecoins. It does have the majority of the RWA. So, like, have you picked your winner as Solana, or are you guys still ETH bullish, or to some extent bullish on ETH?
Yeah, I mean, we're a fund manager that believes in, diversification and obviously, like, with Ethereum, we're still very bullish on the ecosystem. We invest into a lot of infrastructure around it. Stablecoins are still dominant on Ethereum, but yeah, I mean, Solana is definitely where a lot of the eyeballs are on our team from a sort of like asset excitement perspective. I mean, again, like some of the stats that we see that are interesting are the fact that there's 4 million daily active addresses. I mean, annualized like 1.4 trillion in volume in terms of DEXs, like 800 million in terms of annualized like real economic value. So we're seeing, and then the transaction throughput is just like, 4,000 or 5,000 per second. So I think for us, like, there's a lot of potential on the application side for Solana to really dominate in areas like AI, DePIN, and even payments. So, while Ethereum has a lot of the early momentum around stablecoins, Solana is primed to do very well.
Yeah, what do you think? I mean, when it comes to selecting a winner, where do you put your chips around Solana versus ETH?
Well, generally speaking, I mean, we hold both, and you know my theory on this, which is that we don't think of selecting winners at this stage is the right method. It's really about and also the tribalism that exists in these ecosystems makes it difficult to say. I mean, look at Bitcoin. I mean, technically speaking, the utility of Bitcoin doesn't really exist, but it's the undisputed winner when it comes as a store of value. The other thing is that my mental model of L1s and L2s, or specifically L1s, is very much like telcos and ISPs back in the early days of the internet. And don't get me wrong, AT&T is a $200 billion company. It's very, very valuable. But actually what we do most of the time is going to be the applications and stuff that sit on top. And we're at that era of time where the last mile matters, and it's more superpowered because they're financial in nature too, right? So this is like a telco infrastructure that has financial rails on top of it. So it has a lot more longer way to go, and you can build and stuff on it. But the value we see is going to be the consumer applications that are sitting on top. The people who are building AI agents on top of Solana will accrue value to Solana, but the rise or collectively as an ecosystem will probably come from the applications themselves, whether this is Let's Bonk or Pump.fun or some virtuals or some game or that kind of stuff, right? We're not there yet, but I see it very similar to the internet back in 1999, 2000, 2001, right? So, and Ethereum, just to finish off, Ethereum and Solana basically reflect sort of that kind of early ecosystem growth and that composability, but they're building and branching out basically, I would say, in ways where they start to dominate in particular areas. Ethereum is, at this moment in time, still the primary institutional asset, like our own stablecoin with Standard Chartered, is actually looking to deploy in Ethereum first. Mm-hmm. Solana will come, and that's primarily because it has the deepest TVL, right? And therefore the biggest defense framing, right? And so it's harder for a new L2 or L1 to compete in that framing, right? And then the reason why L2's built, the other thing is also architecture, right? I mean, a monolithic architecture like Solana is one type of case, right? But when you look at how Ethereum is building, it's actually a very different philosophy. It's almost like choosing, I don't know, China over America. I mean, I'm just being sort of, dramatic here, but it's basically choosing a different system that is almost politically different in terms of construction and how you want to build on that and the impact it has, right? You might prefer a monolithic architecture versus a more distributed one or vice versa. So I don't think it's a one size fits all. It never really was with human choice.
So the reason why I ask is because I'm trying to get a gauge for how to distribute my own portfolio. I'm holding ETH. I'm holding Solana. I mean, I really brought you guys here to squeeze, free financial advice off you guys, So like, I'm holding ETH, I'm holding Sol. I've got much, much, much more Sol than ETH. My Sol to ETH ratio is about 4-1. And I'm kind of thinking to myself, does that sound optimal, or should I be a little bit more in ETH?
But Ran, is this because Sol just basically moved so quickly? Because my Sol position also is much larger, moved much larger over time. But that's because Sol had a far faster growth rate, right? So versus Ethereum. So I don't know if that's a fair comparison. And also, I feel like that from a distribution standpoint, the way I think of it is that my mental model is there's a position that I like in an ecosystem, and if I'm happy with that number where I see it going, then I actually personally would start diversifying out into other areas as well, right? Because if you're only going to choose Ethereum between Solana, I personally think you're taking more risk, actually.
So where else should I diversify to? I'm open to ideas. I'm open to ideas.
Okay,
I feel like my sole position is getting a little bit too big. I don't know if you remember, but I lost a lot of money when Luna collapsed. Luna was like 55% of my portfolio back in 2022, 2021, 2022. It destroyed 55% of my portfolio. I'm now getting to a point where I'm looking at my Solana position, and I love Solana. I've bought into it. But my Sol is my biggest altcoin position by a 4-to-1 ratio. So question is, where would you diversify to? I'm very keen to hear like some ideas from you as to where you would, without substantially, I wouldn't put the money into AI agents. I'd put the money into other L1 bets or other infrastructure bets. Where would you diversify some of the funds to?
I mean, personally, the way that we do, personally and as well as a group, we diversify some of it into fund managers, for instance, from an asset standpoint, including DATs, like we just did, for instance, here with Helios, right? Yeah. Because they're groups that know how to manage that. That's one, because it's not possible to sort of, pay attention to everything that's out there. And then, of course, we take the view, because we're obviously investors in the space, we take directional perspectives and we say we believe in something, right? And then we say when we believe in something, then we put money behind it, right? So, for instance, we believe in blockchain gaming. It's not doing well right now, right? But that's why we think it's an opportunity. It's not financial advice, but it's where we're putting our money, for instance, as an example, right? And so, and we also think it's more opportunity to buy something that is liquid versus something that is sort of early stage, so to speak, because there is a market opportunity in that area. That's an example of things that we're looking at. And then we're also looking at places that have, new financial primitives, like student loans on chain, for instance, is one, or RWAs, for instance. Why? Because we think there's big mass adoption in them. So you have to have a thesis that you believe in first. Then you have to look at the team and say, do you think you can execute that? And then you back it. So in other words, don't YOLO into just any gaming token, right? For instance, or any kind of, RWA project. Like any investor, do your homework and see if there's conviction in them and do that. That's the way I would do it. Or at least that's how we do it.
What about TON? I know that you guys, I think both of you were invested in TON.
We are, yes.
It's been, in terms of token performance, it's been a little bit disappointing. There's been a clouds over Pavel and what's going on with him and his freedom, et cetera. Are you guys, are you still as bullish on TON as you guys used to be? Paul, I know you guys also at one stage took a very big position in TON. Keen to hear like how you feel about TON at the moment.
Yeah, no, just to echo on what Yak just said, on the liquid side for us, we actually have been diversifying into DATs on the liquid side. And then, of course, I think there's ecosystems like Hyperliquid that are pretty exciting to be able to sort of bring a better derivatives product and then continue to sort of bring a financial primitive to a newer set of users, one that is financially savvy, yet not currently in the crypto ecosystem. That's one ecosystem that we've been diving quite a bit into and looking at some of the applications. And then, similar to what Yat mentioned, we are very thesis driven. So we do believe that, and we're seeing it in Asia, in Korea, and you'll see it in Singapore too, is that stablecoins and payments are an obvious disruption, and especially in the US with the Genius Act, where, we are actually having the regulations around stablecoins where banks and enterprises and institutions are comfortable custodying and sort of using stablecoins as a medium of FX. We're seeing a ton of companies, both at the protocol layer and also at the application layer, really just, embracing the fact that we can actually now use stablecoins for cross-border payments.
So I love the stablecoin narrative because I think up to date, stablecoins have been the most used use case in crypto. I think it's going to continue, and I think that basically every transaction will eventually happen in some kind of stablecoin on a blockchain. In terms of being able to invest in that, so as a retail investor, someone watching the show, obviously the three of us, we get access to early stage deals, and we're happy to be locked up for years and years. But the average
Yeah.
investors watching this and kind of saying, look, I really love the stablecoin narrative. Like, how do they get an entry into the stablecoin narrative?
Well, one of our portfolio companies, Circle, IPO'd, and that's one way to get exposure to stablecoin narrative. They launched USDC, which is right up there in terms of one of the most dominant fiat-backed stablecoins, and they're building an L1 around stablecoins and payments. And so that's one way to sort of get it through the public markets, which is going to be familiar for a lot of institutional investors. Ton is actually, potentially an interesting way to get exposure to stablecoins. We're still bullish on Ton, to go back to your question. I mean, the user base is there, the tech talent is there. I do think they need to focus on continuing to sort of onboard and build up, similar to Solana in the early days, the developer experience, and being able to sort of get some of these commercial applications to market in a way that they feel like they are special and the user experience is there. But we're going to be very hands-on, and all the other investors are going to be hands-on to really sort of help them figure out. Outside of that, I mean, we'll sort of see. It seems like there's a lot of stablecoin L1s that are coming to the market.
Yeah, so Plasma launched. Plasma launched today, 7.5 billion fully diluted valuation. That's one of the layer one blockchains that Tether invested in, and everyone's labeled it the Tether chain. The Plasma chain. It's one of the chains that they invested in. I don't know. Do we need a separate blockchain for stablecoin transactions? Can you not do anything on Solana that you can do on this other blockchain? Or I'm struggling with the thesis of why we need a separate blockchain for stablecoin transactions.
I mean, look, it's not the why, it's because you can. Right? And by you can, I don't mean this in a flippant way. I mean this to say, hey, how do I as a stablecoin create deeper moats? Right? How do I create a way in which I have ways in which I have a competitive edge? And of course, if you build a chain and developers use your chain to build applications and build that out, then you basically start building a network of your own, and you start to control the network effect more directly as opposed to indirectly. If it was on Ethereum or on Solana, then that would make sense. That is not to say that they will succeed, or some may and some may not. It's to say that people tried this. And by the way, this has been true all along. I mean, when Web3 and metaverse gaming
remember this. That's why I'm smiling.
Right? Everyone was launching their L2, L1s. Everyone was like,
it used to be, why do you need a token? And now it's not why do you need a token? It's how do we find a use case for the token? It's like in the old days, like you don't need a token for that,
Yeah. So I think that's one element. Token aside, but I think broadly speaking, other than investing in the respective chains, I think if you wanted to take a macro, where are all the stablecoins trading for the time being? It's an indirect measure. It's Ethereum, right? And then of course Solana. And so the ones that are backed in those areas. And frankly, to me, this is one of the reasons. Speaking of sort of Ton value, which we're very bullish on. We invested in 2 DATs actually, and of course hold positions in Ton broadly. But the point being that if you wanted to back sort of an ecosystem that is growing, Ton doesn't have the same DeFi liquidity for the time being, right? And so it's a good reflection of why, what's happening in that value. Their DeFi ecosystem is growing, but is not evolving as quickly, right? And so you can see that. So the stablecoin usage on Ton should be very, very great, but at the moment isn't as big as perhaps it could be for whatever reasons. And that is also why people aren't developing as much on it, because the liquidity isn't as deep, because you need money in the economy to do so, right?
Yes.
And that's why more people are building on Ethereum, Solana. So, the whole flywheel of economic activity comes from how deep is your liquidity, right? And that's something Ton can solve. It's just something that they're not there at. So you could look at it as an opportunity, right? And say, I'm bullish because from this price point, it should do better. Yes. Or you could be bearish and say, these guys don't know what they're doing, which we disagree with, but I'm just saying that's the lens that you could be taking depending on how you look at it. And there's definitely blockchain ecosystems, who I shall not name, that definitely have demonstrated that they have no clue about DeFi, who are not doing anything in the finance side, who are not trying to increase their liquidity and build the network effects, and probably you should stay away from them because their performance is, to be, explained, right? So it's you can measure that.
So I want to ask you a question. So, Paul, you mentioned that you guys are very bullish Hyperliquid and that you guys are backing a whole lot of projects and in that ecosystem. How do you feel about the launch of Aster and all the hype that's happening around Aster and, you know, the fact that CZ is allegedly behind it in some shape or form, and the fact that, you know, do you think that, have you looked at Aster? Do you have any opinions on it?
I haven't looked at it. I mean, so I'll defer to DAT if you looked at it.
Yeah, look, I mean, Aster, look, first of all, I mean, really, I see of this as it's a BNB ecosystem, right?
Mm-hmm.
And this is BNB basically coming out in force and saying, we're here, and, you know, it's not just $1,000 party, it's also, we're building important applications. And look, you know, we're talking about the biggest exchange in the world, the most successful person in crypto, arguably, right, in the industry, that is basically looking at this and saying, hey, we can do this too, right? And whether they're fully behind it or quasi behind it or somewhat behind it, to me, it kind of doesn't matter if it's built in the BNB ecosystem, because they lean into their ecosystem to make it work because they've got that there. And I would say, unlike, for instance, some of the other ecosystems like Ethereum, which is completely decentralized, and, you know, it takes a while for them to get their shit together because they have to sort of agree on building consensus. It's definitely very different over at the BNB side, because you have such a powerful voice that's basically driving that. And it's no doubt that there's a question around saying, hey, this is something that's really ripping. We need an answer to this. Whether they, and you know, Binance has had a history of, or Yeezy Labs now, of course, for the lab side, has a history of backing companies that are promoting the BNB ecosystem, unsurprisingly, right? Yeah. And so you should look at it from that particular lens. And the thing I would also say is because it's very finance oriented, right? So they have done other things as well that haven't worked as well, but it's because it's not their core expertise, I would argue. But when it comes to finance-related matters, you know, like perps and dexes and stuff and that kind of stuff, you know, they know their stuff, right? They've had a lot of time on this one. So,
exactly. That's why I ask. That's why I ask if you think it could be a threat to the Hyperliquid ecosystem. You know, the one thing that I like very much about Aster is the fact that it's got the dark pools and it's got the hidden orders and it's got they've got
an innovation. It's an innovation.
You know, that's a big thing that's actually missing, because as CZ said multiple times, like if you're trading $300 million or $3 billion, you can't have everyone see your orders. You can't have everyone see your position, because they'll come and hunt you. You know, like when the bigger the honeypot, the bigger the honey badger. Like that's just how it is. And they will come for you. Yeah. Yeah.
No, as institutions get into this space, I mean, we're going to need privacy. So I agree. That's a pretty unique feature.
Yeah.
Yeah. And by the way, competition is just one thing, Rand. Competition is a good thing, because of course Hyperliquid isn't just looking at this and saying, oh, you know, well, you know, come eat our lunch.
No, they're smart people.
So yes, exactly. They're super smart people. So they're going to start innovating in their own way, and it just furthers the ecosystem. So hey, you know, bring it on is how I would put it.
Should be fun.
Yeah.
Yes, exactly.
So I must confess, I bought another token this week, or 2 weeks ago actually, and you know, I haven't bought this token before. It's WorldCoin, and I don't know. My thesis was a pretty simple thesis. You can't bet against one of the most powerful people in the world today, if not the most powerful person in the world. Like how do you bet against Sam Altman? And like I just don't get how you bet against him. And I was like, I better have some money on this thing just in case it does something. How do you guys feel about WorldCoin?
We're pretty excited about WorldCoin. We put a position on a bit ago, and from the liquid side and on the private side, you know, regrettably, we passed on the seed round. And looking back, one of the reasons why I've missed some of the biggest winners out there, I've hit on a lot, but you know, some of the biggest winners that I've missed have just not been just betting on the team, even regardless of price. And Sam Altman is one of those guys. What also got us a lot of conviction too is, you know, every single time they've gotten a lot more mainstream in terms of how they're communicating what they're trying to do. I mean, the events that they have look like, you know, Steve Jobs back in the day with the iPhone unveiling, and it's quite sexy, but it's quite appealing. But like the last event that they did, the partnerships that they were able to sort of nail down, I mean, really sort of took it more from, hey, they've developed great hardware, great technology to really, you know, execute on proof of human, But at the end of the day, I mean, can this turn into more of a financial product, something that actually can fit in and be a place where you hold your assets, be able to then sort of interact with applications and then actually be a place where all financial transactions happen, especially in the emerging markets. And the partnerships really made it a lot more confident for us that they can really sort of execute on a broader vision to really have WorldCoin and the identity layer be folded within some of these larger sort of payment use cases.
What do you think, Yat?
Yeah, so I mean, so we didn't invest in WorldCoin as a token, but we did get into 𝗏𝗏𝗄𝗃, so did okay on that.
Yes, nice.
𝗏𝗏𝗄𝗃 is the treasury company, just for people who don't know about it.
Treasury company, yeah.
Yes, it's a treasury company, because our view was that Sam Altman had basically more of a meme personality in the trad markets than in the crypto markets, and it turned out that in a way that was true. It was tough to get allocations. Everyone wanted a piece of that. So we're very fortunate to do that. And to your point, don't bet against Sam Altman. However, my view on Sam, and so when it comes to proof of humanity as a tech, scanning eyeballs, we do think is a little bit tougher than say what proof of humanity is doing, which is scanning your palm, which we backed a fair bit because we think as a use case, it's easier from an adoption standpoint. So that's kind of why we took that lens, right, from a utility perspective. And the other thing is that, Sam is a very mission-driven person. I think that's very, very clear. And I think the token to him is a means to an end, but is not the end in itself, right? I don't think that he's a person who is focusing on the price of the token. His team obviously is, right? But is this his primary focus? From the interactions I see, it's not. It's not like he talks about the token. It's not like you see him. I would say that Elon Musk tweets more about Doge than he tweets about WorldCoin. Might be exaggerated, but do you know what I mean, right?
Yes.
So it is very much the goodwill of his brand, which is very powerful. Don't get me wrong, but you're basically taking a risk on his brand and not his effort, I would argue, in comparison to, say, OpenAI. Like if it was an OpenAI token, it's sign me up, baby, okay? But if it's a WorldCoin token, to me, that's an element of that. I don't think it's the main thing. His team is good, but their team is not out there. So you're taking more of a Sam Altman risk perspective. So from a utility standpoint, we would therefore sort of back something like proof of humanity because we think it's more likely that people would use their palm. And also, I think there's regulatory pushback on scanning eyeballs, as we've seen in some places around the world. That said, I do think it's a broadly sort of good bet just because it's Sam, as long as he remains in the position that he is. It's like if there was a token that Elon actually was involved in, right?
His biggest value add has been on the regulatory side, so he's got to really lean there because, as you mentioned, eyeballs is much different and much more difficult than palm reading. So he's got to continue to flex there for sure.
What about Pump.fun? Did you guys, either of your companies invested in Pump?
Yeah, so we are LPs in Six Man Ventures. So we have a position in Pump that way. So thank you, Mike. But Pump was one of those things that never came to us at the time. Just because we're a prolific investor doesn't mean we see everything. And so it's that's the situation. I think if we had seen it earlier days, at the time, we'd like to back really sort of creative founders. There's a likelihood we would have invested, of course. Sort of it's like a little bit of like hey. However, so we have indirect exposure. Did have a chance to meet sort of one of the founders, and these guys are creative. And again, I wouldn't bet against them, right? Because there's some founders that are very driven on some things, and I think we've seen this, right? I mean, they're making a lot of money. Token was kind of had a bit of a sort of awkward launch, shall we say, right? And
I love those awkward launches. I love those awkward launches because you just
opportunity.
You just know that when you need to pounce. That's what you know when you need to pounce.
But it's also the test of character because that's where you take the bet. You kind of go, okay, is this a founder who's like, is this a group of people who are like, okay, I'm leaning in despite all the success, right, and just making it, or am I kind of retreating? Because a lot of people, in those situations might just say, throw in the towel and go. We've seen a lot of that, right? And I think the test here is the fact that they've really leaned in and sort of took the fight. Because, there was a moment where, let's bunk. Let's bunk was like, ooh,
I call that the shiny object syndrome. Like there's shiny objects all the time. It's actually, to be honest, it's the same thesis that I have around Aster and Hyperliquid. If you look at Let's Bonk and you look at the market cap at which it topped, it was $4 billion. That's where Let's Bonk, fully diluted, it topped at $4 billion, which was coincidentally the same value, or uncoincidentally, the same value that Pump.fun was when in their last round, right? And my feeling with these things is that you get a shiny object makes headway. People will rationalize it to a point where they've rationalized it to being equal to the other one. And when it eventually gets it, then they start asking the real questions. And, I must say right now, I back Hyperliquid more than I back Aster today. Because Hyperliquid have been fighting in the DEX trenches for a long time. Whereas Aster's just come out. And I know that they were different decentralized perps DEX before, but I think that they're just in the ring. And like if you want to compare it to fighters, it's like you've got an experienced fighter and then you've got this new fighter who comes out swinging and you're kind of like, wow, these guys are very good. They're a perfect match. And then, in time, what you realize is that the experienced fighter and the one that's been in the trenches for long enough usually ends up putting through. I'll remind you the same thing happened with PancakeSwap and Uniswap back in the day where PancakeSwap hit the same valuation as Uniswap. And then they decoupled again and PancakeSwap sitting at a 1 billion market cap at the moment and Uniswap sitting at its 8 billion market cap at the moment. So like, I get it. I love shiny object syndrome. I know how to trade shiny object syndrome. I'm kind of watching this Aster Hyperliquid thing. And I know at some point people are going to panic around Hyperliquid, put more money into Aster, but that's when I'm going to go back to Hyperliquid. And that's how I'm playing this thing in my head.
It just goes back to the team again, right? And we've had exposure along the way through to Pump, and we've known the team since the seed round, and they are relentless. They really are, and they're really ambitious. It's like 2 or 3 orders of magnitude of ambition more than what we've seen in normal founders, and so. Even with their token sale and an innovative model to kind of go out there and sort of like, go high float, and they're continuing to sort of recover from it. So it's amazing, and it's a product that is I think it's going to continue to be there and continue to innovate. They're going to go full stack. We'll see.
I must say, I did it.
Absolutely.
I did a stream on Pump, and I watched my own coin trading just for fun. I watched it, I did it, and I can tell you it's addictive. It's like streaming itself when you stream as a streamer, most of us actually do it because we're addicted to the feedback loop of the likes and the comments and stuff like that. Now, and some of us do it, some people do it for the money. I don't really do the streaming itself for the money, right? For a normal creator, you've now got this thing where you've got the streaming and you've got the validation through the chat and whatever else. But then you've got this next level of validation, which is about 1 billion times more addictive than the likes and everything else. And that is people trading your own coin. And it's like you watch the transaction fees actually going up and you're pocketing these transaction fees. And I tell you that it's addictive. I get why people are doing it, because watching people trade your coin is another level of social validation and dopamine, and that's really why streamers do what they do, right? So I'm very, very, very bullish. It's the first product where I can say that I'm bullish about some kind of social media innovation. I haven't seen a social media innovation, and I haven't seen a social media innovation on blockchain. And now it feels to me like blockchain has actually solved one of the big problems by just saying, look, whatever the trading fees of people trading your coin, which is now the new like meta, is goes to you. And I think that's a sustainable model, which I think is absolutely, absolutely amazing. Yeah. Anyway, guys, listen, I got to get to Singapore. I know, Yat, are you gonna be in Singapore?
Of course. I mean, I have a career already, so it's just another flight away. So I'll be heading there shortly. Yes.
Paul, so I'm leaving on a flight now. Paul, I know you're not coming. We'll miss you there. Yat, I'll send you an invite to the banter party so you can join us like you do all the time. Guys, thank you. Thank you so much. It's been amazing chatting to you. I feel
you.
a lot more calm
you.
about my DAT positions, and I feel like my portfolio is going to be in a much better place once I've made a couple of changes based on this talk. So thank you so much for the free financial advice, even though I know it wasn't financial advice. Thank you guys. Much appreciated. And to you guys, the Banter fam, thank you guys. I'll see you guys again next week. Next week's going to be a little bit broken because I am in Singapore and I am at the conference. Obviously, I'll try and come to you as much as I can if things are happening, but otherwise I'm going to go onto the ground and I'm going to find all the alpha out there and whatever else. So listen, I'll see you guys next week. Until then, trade well, my friends.